Hi everyone, Dan Holmes here. Welcome to the Feedzai Weekly update. This week we want to talk about money mules. And money mules are essentially the accounts that fraudsters use to receive fraudulent funds. And mules themselves can come in many different shapes and sizes. For example, there are purpose-open mules. These are accounts that fraudsters open with the pure intention of using them as money mules. But also, there are unwitting money mules. So these are examples where fraudsters convince once legitimate customers to allow them to use their account for muling purposes, and that customer then becomes a conduit for moving fraudulent funds through the system. And with this latter example in mind, recently we've seen banks such as Santander, Barclays and Lloyds Banking Group putting out public warning messages to consumers, alerting them to the risks of acting as a mule. With Lloyds and Barclays in particular taking the hard line and warning consumers of the potential prosecution risks, which includes up to 14 years imprisonment, as well as the financial repercussions of potentially struggling to obtain banking and credit services in future. However, despite these warnings, the data from the banks show that money muling continues to run at its highest rate of all time. And while the banks agree that it's the younger generation that are most vulnerable to money muling, with Santander reporting the mean age of a mule in 2022 as 31 years of age, Lloyds have also reported a significantly sharp rise of 29% in the increase of over 40s involving themselves in muling as well. So what advice should both banks and consumers be considering when it comes to improving the prevention of money mules? From the consumer's perspective, the advice is pretty simple, but here are 3 key tips. Number 1, if somebody approaches you on social media or any other channel and asks you to provide a service in exchange for a small fee, ignore it. Secondly, never allow somebody that you don't know access to your banking services. And number 3, never provide any of your financial information to people that you don't know or trust. And then from the bank's perspective, the volume of purpose-open mule accounts where false or fake identification is used to trick the bank's onboarding systems are actually quite small. The bigger risks to the bank are once legitimate users selling their accounts and credentials onto fraudsters for them to use as mules, or for fraudsters to convince legitimate customers to allow them to transfer money through their accounts in exchange for a fee. And there are a number of things that the banks are thinking about in order to address these challenges. For example, looking at ongoing life cycle risk propensity. So analytically looking for subtle changes in account behavior or subtle ways in which the customer starts to interact differently with their account, and using that as a flag for investigation. And then secondly, looking at inbound transactions in the way in which banks have traditionally analysed outbound transactions from a fraud perspective. So thinking about how often does somebody receive transactions, what's the typical amount that they normally receive, and using that baseline to flag anomalies and potentially freeze funds and validate the intent behind them before allowing the customer access to them. Thank you very much for watching. This has been Dan Holmes with the Feedzai Weekly Update.